Everyone. So in this session we will be learning about vertical balance sheet format. Okay, so as you can see, this is a vertical balance sheet in the books of so and so company. Balance sheet as on, so as on is date, as on specific date. Balance sheet is always as on a specific date. Okay, so now let's see. You have particulars, then you have working notes. Working notes is nothing but detail of each and every part of the balance sheet. Then current year amount, 2 columns. Then previous year amount, 2 columns. So current year amount, you have a total, inner total, then you take a total to the outer column. Okay, similarly for the previous year. Now let's see all items one by one. So basically your balance sheet is divided into two parts: sources of funds and application of funds. Sources of funds. Now sources of funds is, as the name itself suggests, what your funds for your purpose of business. That is, these are long-term funds. Okay, so long-term funds for your business are sourced from following resources. Okay, first is shareholders fund. Okay, that is a owner's fund. Okay, so it includes your equity capital, then your preference shareholders. Okay, now you, if you see it here, I have written working note number 1. So details you have to write it here. Okay, so shareholders fund, equity shareholders authorized so and so shares of rupees so and so per share. Okay, then out of that, issued, subscribed and paid up capital is so and so shares of rupees so and so per share. Okay, then even for preference shareholders, authorized is so and so shares of rupees so and so per share. Issued, subscribed and paid up so and so shares of rupees so and so per share. Okay, so details you will have it in this columns, that is current year. Okay, then after that you have reserves and surplus. The reserves and surplus is your surplus or your reserves, that is your profit and loss account balance, which has not been distributed to your shareholders. So those are also your owner's fund only, right? Reserves and surplus are also part of your owner's fund, but the difference is that some amount of your profit or surplus is kept aside for some specific purpose. Okay, so those funds also belong to your owners for funds or shareholders, which is invested in the business, but they are not distributed to shareholders. So they will be categorized under reserves and surplus. Now reserves and surplus, there are some specific reserves as well as some general reserves. For example, capital reserves. So some reserves which are kept for the purpose of some capital investment, those are included in capital reserve. Then share premium reserve. So whatever, when the shares of the companies are issued, whatever additional premium that you receive per share, that is included in this share premium reserve. Then revaluation reserve. Revaluation reserve is usually in the case of fixed assets. So when a particular fixed assets is revalued to its new amount, then you have a revaluation reserve. Then the next is capital redemption reserve. So when the capital is, there is a redemption of a capital, okay, that is included in your capital redemption reserve. Then the next form of reserve is a revenue reserve. Now revenue reserve means the reserves which are not capital in nature, that is, they are generated from your day-to-day profit or day-to-day trading and day-to-day business of the company. Okay, so what are the forms of revenue reserve? One is general reserve. General reserve is some reserve which is kept for a general purpose aside from your profit and loss account. Then asset replacement reserve. Now in the business, usually after 10 to 15 years or a particular, depending on the life of the asset, you need to change your asset, replace your asset with a new asset, or there needs to be some heavy investment which needs to be made in the asset. Okay, capital investment. Okay, so to bring the asset to the good position or so that the asset works properly. So all that additional reserve for the purpose of asset replacement is included in asset replacement reserve. Then there is a profit and loss account. Profit and loss account is your normal balance which is carried forward from your profit and loss account. So in that you have some opening balance, that is the balance of last year which is carried forward, plus profit of the current year, or if there is a loss from the current year you have to reduce it. Then the next important source of fund is loan. First was the owner's capital, right? Owner's fund. Now next is loans. In that loans you have two categories, secured loan and unsecured loan. So note number 3 is for loan. So secured loan. So you have to mention from whom the secured loan is taken. And then you have to specify what is it secured against. Secured against so and so. Then unsecured loans also you need to mention what is the details of unsecured loan. What is the rate of interest. And everything else about the unsecured loan. So this was about the sources of fund. Okay. Now the next thing is application of the funds. So we have got the funds from the various sources. Now application of fund is how do we apply those funds in our business. Okay, that is where do we invest those funds in our business. So that comes under application of funds. Okay. Now in application of funds, first is fixed assets. Okay, so fixed assets will include your gross block less accumulated depreciation and net block. So if you go to note number 4, note of fixed asset, calculation of depreciation. So fixed assets basically has intangible as well as tangible assets. Okay, intangible assets will include your goodwill, then your copyrights, patents, etc. Okay, and then your tangible assets means your land and building, plant and machinery, furniture and fixtures, etc. So if you see, the calculation goes as follows. You have a gross block. Gross block is a total cost of fixed asset, okay, without calculating depreciation. So opening balance, then additions. So additions of furniture and fixtures will come here. Addition to plant and machinery will come here. Addition to land and building will come here. Then deduction. Deduction is mostly sale of fixed asset. Or if any fixed asset has become obsolete, then you have to include it in deductions. Then the closing balance. Okay. Then similarly accumulated depreciation, that is the total depreciation on the fixed assets. Okay, from the beginning till date. Okay, so opening balance, then additions is your depreciation during the year. Okay, then deductions is depreciation is accumulated depreciation on the sale of asset. Okay, then the closing balance of accumulated depreciation, and then the net block. Net block is your opening gross block minus opening balance of accumulated depreciation. Then closing balance of net block is your closing gross block, closing balance of gross block minus closing balance of accumulated depreciation. So all this will be included here in application of funds. Then second is investments. Okay, note number 5. So investments here includes your long-term investments. Okay, that is investments for more than 1 year. Your some temporary investment which are being kept. Okay, so suppose say there are some extra funds which are not required for working capital and they are temporarily invested somewhere, that investments won't be included in note number 5. Okay, it will be included later in your current assets. Okay, now this investments means your long-term investments. So you have to give the details of investments like name of institution in which the investments have been kept, the rate of interest and so on. Okay, then the next is your current assets, loans and advances. Okay, in that you have inventories first. So note number 6. Inventories, you have to mention separately what is the stock of raw material, work in progress, finished goods, then the consumables. Okay, and then the next is the sundry debtors. Note number 7. So sundry debtors, you have to categorize debtors into two categories. Debtors less than 6 months, more than 6 months. Okay, then your cash and bank balances. So cash and bank balances will include your cash in hand and cash at bank. Cash at bank means your bank balances, various current accounts balances will be included in cash and bank balances. Then loans and advances. Now loans and advances will include all your prepaid expenses or advance expense which has been paid, then the advance tax if it is paid, okay, then some temporary loans which are given, all those will be included in your loans and advances. So the total of all this will be your total of current assets, loans and advances, okay. Then from that you have to reduce your current liabilities and provisions, okay. So in point number 3, your current assets, loans and advances minus current liabilities and provision. So this is nothing but the working capital that is required, okay. So current liabilities, you'll see the details of current liabilities in note number 10. Current liabilities will include your sundry creditors, then outstanding expenses, then proposed dividends, okay. Then there may be some other current liabilities, okay, like tax payable, sales tax payable, or your income tax payable. All this will come under current liabilities. And then provisions. Provisions is some estimate which has been made, okay, but the amount is not confirmed. For example, you make provisions for taxes, okay, so accordingly provision for income tax will come in here under provision. Then there may be some expenses for which the final invoice is not received till the end of the year, okay, or till the time when the balance sheet is prepared. So all this, for all such expenses you will make some provision, that is provisions will be based on your estimated amount of expenses, okay. So all this will come in this category, provision for expenses. Then your 3 total will be current assets, loans and advances minus current liabilities and provisions, so that is nothing but your working capital. 4, miscellaneous expenditure, to the extent not written off or adjusted, that is not written off in profit and loss account or adjusted with your current profit, whatever is the balance in the miscellaneous expenditure, to the extent of which it is not written off, you have to include it in this. Then profit and loss account. Profit and loss account is, say suppose there is some loss, okay, or there is no profit in the business, there is loss, so profit and loss account debit balance will come here, okay. Your profit and loss total should be showing a debit balance, okay. If that total is showing a debit balance, it will come here. Then you have total of sources of fund and application of fund, okay. So balance sheet can be prepared as at the end of any day or as on any day. So the total of sources of funds should be equal to your application of funds, okay. So this was about a vertical format of balance sheet and the working notes required. Thank you.